Shares of Wayfair plummeting after reporting Q4 earnings. Revenue in the quarter beat expectations at $3.1 billion, but that number is down over 4.5% since last year. Adjusted EPS coming in below the street's estimates at a loss of $1.71 a share. Our next guest is bullish on the stock. Joining us now, we've got Tom Forte, who is the D.A. Davidson Managing Director and Senior Research Analyst. Tom, first and foremost, we just got your, of course, updated price target here on the day. You actually moved it higher from $45 to $49 here with a buy rating. People who are watching the stock today are trying to figure out, why should I buy it if I'm seeing it decline to this extent after the earnings report?
Yeah, so I think that the reason that Wayfair is a buy heading into earnings and a buy heading out of earnings is that the company is positioning itself to return to positive EBITDA. So if you looked, for example, at the fourth quarter results, they had positive EBITDA for their U.S. operations, but lost money on their international operations. So I think what you're seeing today in about the 25% pullback in shares is a combination of investors concerned that their commentary on first quarter sales being closer to down -10 than say down -6, and that the path of profitability, so exiting 2024 with positive EBITDA, may be a little crooked, I guess, is how you might want to think about it, meaning that in the first quarter they could lose more money than in the fourth. But that's why I think the stock's under very significant pressure today. But it's also why I think it's still a buy.
And Tom, in the shareholder letter that Wayfair put out, my favorite line is that they said, to borrow a line from the Grateful Dead, looking at the last 3 years, it's summarized by what a long, strange trip it's been. Of course, we know that Grateful Dead song. But Tom, tell us a little bit about, what do you like about this company? Is it the cost cutting that they have done?
Yeah. So to be clear, you can't cut costs to prosperity, which is something we've said before about Amazon. The same applies for Wayfair. So there is risk here that the $1.4 billion they're taking out of expenses, they're doing much more potentially than just trimming fat. They may be cutting into muscle. But what people may not realize about Wayfair is that in the 12 years before they created kind of one brand, Wayfair, they ran multiple home-related e-commerce companies and ran it on a profitable basis. So when they created the umbrella brand of Wayfair, they've been losing money a lot of times because they're spending heavily on promotion to promote the brand. So I do think that this is a management team that has the ability to run the company profitably. It's just going to take a little time to right-size their cost structure. And then if you look at the home e-commerce market right now, it's very challenged. I think you've talked about it multiple times today. The Fed's 400 basis point increase in rates over the shortest period of time put a lot of pressure on home builders in the home sector in home e-commerce. So I do think that pressure may start to abate in the second half of the year, and things should be looking up for Wayfair as the year progresses.
One thing that I had seen and heard within Walmart's call earlier this week was the weakness that they cited within home. Is weakness that Walmart is seeing within home an opportunity for Wayfair, or is that something that should be a warning or a red flag?
It's an opportunity for Wayfair over an extended period of time. But if you think about Wayfair and you think about overstock, when Target and Walmart both indicate that they're materially over-inventoried in the home category, and then discount heavily, that puts pressure on overstock, that puts pressure on Wayfair. So the fact that Walmart believes that it's got too much inventory in discretionary products, especially in the home category, that's a near-term headwind for Wayfair.
Tom, on the earnings call this morning, Wayfair CEO Niraj Shah addressed the uncertainty in the economy and what it means for the retailer. Take a listen.
As confident as we are in the steps we've taken to get back to our roots, it's important to remember that the macro environment is still very uncertain. Consumer sentiment remains under pressure given the uneven state of the economy, with multiple cross-currents impacting the directions of interest rates, housing data, and the mix of wallet share to services over goods. In spite of all of the noise, we remain empowered by the elements of Wayfair that make us a unique and premier shopping destination for home.
And you've talked to us about what you like about the company, but getting back to that point of the consumer, I mean, if the consumer has to keep spending on necessities, has to keep spending on energy prices that are going higher, Do you think that this is a risk for Wayfair at the end of the day?
So the answer is absolutely it's a risk. When you think about e-commerce sales in 2022, from Amazon to Etsy to Overstock to Wayfair, they were challenging across the board. Shopify including that as well. My colleague covers that now. But e-commerce sales in 22 were soft. Why were they soft? Consumers were spending more of their income because of inflation on energy and on food. And then given the current state of the pandemic, consumers were taking the opportunity to travel, to get out of the house. We talk about as revenge travel. So there's been weak e-commerce sales. That's challenging for Wayfair. And then on top of that, you have the rising interest rates and pressure on home. But I do think you're going to see improvement in trend, both for e-commerce sales in general and for home as the year progresses. So there's some light at the end of the tunnel for Wayfair.
Does that counter-cyclical recovery then in travel that we've heard from CEOs within the airlines industry, within the accommodations, the hotel industry, does that counter-cyclical recovery have an extended risk then in some consumers out there normalizing or prioritizing over an extended period of time that travel experience in the experience economy versus having the physical thing or having, the couch that just might break down based on some anecdata that we've heard from some of our own team?
Yeah, so I think that there's multiple layers of pressure on discretionary spend. What you saw at the end of last year, we talked about it being the Taylor Swift holiday, was a return to live events as well. So you had consumers returning to travel. We talk about revenge travel, consumers returning to live events. Even if you have a couch, I guess, that may be needing to be replaced sooner rather than later, there's reasons on a short-term basis, and you've seen this in the numbers the last 12 months, that consumers are spending less on e-commerce, and in particular less in the home category. But generally speaking, what you have in periods where people can't sell their home is that they start investing in remodeling their home. That could benefit Wayfair. Think of incremental sales of bathroom vanities, things of the like. So there is a small counter-cyclicality in the home category. But again, I think that investors are just way too negative on Wayfair, on anything they said today. And I have a high degree of confidence that they'll be able to return to profitability, which is what they did for 12 years before they created the umbrella Wayfair brand.
Well, I guess me not being able to get tickets to Beyonce's Renaissance tour is a net bullish indicator for Wayfair. Tom Forte, we appreciate the time here on the day. Thanks so much.